Ravi Dharamshi, founder and CIO of ValueQuest Investment Advisors. Ravi, so good having you, to you and yours. A very happy Dhanteras, and may this only usher in even better times than what the last few years have been like.
Thank you, Niraj. Thank you for the wishes. Happy Dhanteras to you as well, and happy Dhanteras to all your viewers.
Thank you so much, Ravi. I know we spoke, so this is what I'm going to do today, Ravi. I spoke to you very briefly about your thoughts on the green transition or the energy transition, the green revolution, however you term it. You've written a fantastic book there. We are going to do a very long format podcast with you sometime in the month of November on the same, with you and your team. Today's show, about 15 minutes. I want to dedicate this to that particular thing simply because if that is the thing of the future, if that is the thing that can create dhan, then on the Dhanteras day, it's apt that we talk about that in some detail today. So Ravi, I will not go around market kya lagta hai, whether you're buying, selling, how much cash you're sitting on. I want to understand that when you're thinking of the next 10 years, why is it that you think that this is the big theme from where great growth and great wealth can be created?
So, isn't it quite obvious? See, there is a pressing need for humanity to bring the temperatures level down. What we have done with the Industrial Revolution is that we have increased the temperature of the planet incessantly for a period of 150 years through the greenhouse gas emission. And now, finally, the world is coming together and acknowledging the problem and working towards solving that. This is not something that can happen overnight. It's been 50 years in the making. We have the technology, we have the political willpower, we have the regulations, and now we have the money flowing in that direction as well. So the tipping point has been crossed. We don't need to convince anybody that, yeah, okay, there is too much greenhouse gas emission, temperature levels are rising, ice is melting on the Antarctic, things are happening, and there is no planet B. So we need to ensure that we keep the temperature rise to below 1.5 degree by 2050. And that's the pressing need. But it would not have been a business opportunity unless, we saw that money was flowing over there. Mega trends tend to last 20, 30 years. But our investment horizons are rarely 20, 30 years. In a 20, 30 year horizon, we have to break it down into chunks of 5 years. And in that 5-year horizon, do we see businesses and sectors that can benefit because of these tailwinds is what we look for. So we have, as I mentioned earlier, we have the technology. And when I say technology, there are few technologies which are still evolving, but the main technology that is going to be driving this whole thing is the solar energy. And solar is not a new technology. It's been around for 50, 70 years. But what is new is the fact that the costs have fallen dramatically, and efficiency levels have reached a level where it becomes very economically viable. Only when there is a confluence of technology being available, technology being affordable, and technology being acceptable is when the mass adoption of that technology happens. For example, a lot of people say that nuclear is the answer to all our energy problems. Yes and no. Nuclear is the best and the cleanest form of energy. But no, it won't be adopted on a mass scale because one, it is very capital intensive at this point of time. And two, because it is not a very accepted technology. There is something called as NIMBY effect, not in my backyard. Nobody is going to want a nuclear plant right next to their city also, forget house. Then modularization of that is being talked about, but I find it very, very difficult to envisage that it will someday become a mass technology. Anyway, coming back to your question about this green energy transition, the need is very clear. But now coming to the point, where do we make money and how do we benefit from that trend? So over there, I think before we even think of moving to the green energy, we have to first pave the road. Before we start selling the cars, we have to pave the roads, right? If there are no roads and the roads are still built for horses to run on them, then that is not good enough for the cars. So you have to first build the road. So power transmission is the road on which the green energy transition will happen. And power transmission as a sector, the need is in the next 5 to 7 years, we need to make a bigger grid. We need to make a smarter, effective, and efficient grid that can talk two-way to the houses, because now the generation is not happening necessarily at around 200, 250 coal plants in the country. It will happen at 10,000, 20,000 different utility scale level, and also at household level also. And they will constantly supply to the grid and take from the grid, both the things. So the kind of grid that is needed to manage renewables is very, very different. Renewable is also not generated throughout the day. It is solar generates during the day, wind generates during the night. So you need a different kind of a grid for that. Then the generation areas are actually far off from the areas of consumption. So you need to evacuate the power from Leh, Ladakh, Kutch, Gujarat, Rajasthan to the power consumption center. So you need to lay out lots and lots of cables and transformers, conductors, transformers, cables to evacuate that power to the area of consumption. And last but not the least, the generation capacity is now coming up much faster, because it takes only 12 months to put up a solar plant, while it used to take 4 or 5 years to put up a coal plant. So if your generation is coming up faster, you need to actually have your transmission in place before that. So all these things are the reason why power transmission is the first of the block in this green energy transition, besides solar. There are some other technologies which are still not, in my opinion, not reached that technology and cost inflection curve, like whether it is battery storage or hydrogen. They have great potential, but at this juncture, they are not yet commercially viable. I'll pause there and wait for your follow-up question.
Interesting, Ravi. So it's a bit of a pick and shovel strategy that you are kind of focusing on for the next 5 years, wherein those would be the ones that would create wealth. Am I getting it correct?
No, so that is absolutely true. We do tend to focus on picks and shovel sellers. However, for that, there has to be somebody has to believe that there is gold. Only when there is somebody digging for gold will the picks and shovel seller also make money.
That's true.
But there the nature of us being an equity investor is different. So somebody has a mindset of an infra. Somebody is happy with a 12, 13, 14% kind of IRR, project level IRR. That is good returns as compared to some of the other infrastructure projects. In fact, these are good returns, and so money will flow into it. And with the fall in the module prices and the entire supply chain, it actually becomes even more viable. And now if you see that tariffs have also kind of stabilized between 2.5 rupees and 3.5 rupees. So at this level, at this price point, good 12 to 14% IRR can be generated, and with a little bit of leverage, you can bump it up to 18, 19% also. So those are great returns for long-term infrastructure based investors. But for us as an equity investor, what is more exciting is the guys, those who are going to sell picks and shovels to these guys who are going to put up these utility scale, or even for that matter, rooftop or any kind of power generation unit.
Got it. Ravi, so therefore, just to simplify it for our viewers, would transmission cable companies, would transformer companies, would these be the ones, or are there some others? Because I may not be understanding it completely. Could you lay it out which of these would essentially be the ones that could create wealth over the next 5 years maybe?
See, if you have to look at the entire energy transition, it can be broken down into 3 buckets.
Okay.
Power generation, power consumption, and power transmission. These are the 3 buckets. In the power generation buckets, there is solar, wind, nuclear, biofuel, maybe gas, natural gas. Those are the kind of, natural gas is fossil fuel, but it's the cleaner of the fossil fuel. So those are on the power generation side. And of course, there are some antitheses also, that you actually bet on the fossil fuels also, because even though they might be going down in the energy consumption bucket as a percentage, but you will still need some of them. And India is actually an exception in the world where there is growth even in the fossil fuel side, because the base load power will still be required to be sourced from the fossil fuel. It's only that renewables will form the top 50 to 70% of the power basket. So that's on the power generation side. Then on the power consumption side, there is basically electrification of everything, from EVs to e-buses to two-wheelers to all kinds of energy efficiency. Those kind of companies that are focusing on the power consumption side, those are the companies addressing that opportunity. And transmission is the piece in between, which has what you spoke about, cables, conductors, transformers, are the companies catering to that. And in fact, if you see, I mean, Elon Musk has also been tweeting about the potential of sun and the shortage in the transformer sector. It is real, and this is not a only India specific phenomena. This is a global phenomena where the US has not spent money on its grid infrastructure for the last 50 years. They need to replace their entire infrastructure, and they need to expand the capacity, and they need to enable it for the renewables. So just like India, US also has to do that. Europe, China is the only one that's been trying to do that and is ahead of the curve than everybody else since the last 10 years. Europe, Africa, Latin America, every continent needs to do that. So it's a huge opportunity for the entire world. And the good part about this particular power transmission space is, as compared to some of the other power generation, is that the technology over here still remains, it's not like some new technology has come up. The power conductor transformers have been in existence for donkey years. The only thing is probably they have become slightly more efficient. So the innovation over there is not much. There is not much disruption. So the companies that are catering to that opportunity remain the same that were catering maybe 20 years back as well. So there is a large delta in terms of opportunity, and there are few companies that will be able to cater to that opportunity, and that means we will be able to retain a lot of the value. And as minority shareholders, we get a chance to participate in it because most of the companies are listed, most probably. Having said that, I won't say that this is a totally new theme. A lot of market has also gotten a sense of it, and they have factored in a lot of it. So a lot of future is in the price, but that does not mean that the opportunity is about to end.
Okay, I think that's the key thing. Now, Ravi, before we try and wrap up, just one thing: is the starting valuation a bit of a hitch here, or you believe it's a longer runway?
You're talking specifically about the green energy, or are you talking about in general markets?
No. Today is only green energy, Ravi.
Okay.
Just trying to focus on that.
No, so see, I'll just give you a perspective that usually when a S-curve adoption happens of some technology, and I'm particularly talking about solar over here, is we always tend to underestimate the kind of growth that will come about. Now, a lot of people feel that there was a 50-60% price drop in the solar PV module. Absolutely right. But despite that, the company's revenues have been going up. Why? Because their volumes are going up far more than the price drop. So they are able to generate higher revenue despite fall in prices. Second, people tend to focus only on one side of the equation, which is, let's say, module prices falling. But the other side of the equation is that the raw material price also catering to that is also falling. So the spreads are still intact as they were earlier. In fact, on an if I were to just give you a mathematical thing, in a solar module chain, modules were available earlier at around 22-23 cents. And probably the companies where the cost of one step minus from the module was cells. And the cells were available at around, let's say, 17-18 cents. So there was a spread available. Now, the prices have fallen for the modules from 23-24 cents all the way down to, in China, some 10 cents, but for India, let's say 14-15 cents. But even the incrementally, the input prices have also fallen to around 10 cents. So a 4-cent spread on a 14-cent is far bigger than a 6-cent spread on a 24-cent. So optically, it looks like the margins have gone up, despite the fact that the prices have fallen. But that is just an optical illusion. We have to focus on the absolute numbers. Absolute sales is increasing or no, and absolute EBITDA is increasing or no. That is the way to get over this constant fear about Chinese prices falling and Chinese companies are making losses. Yes, they are, because that for them it is a central directive that they have to actually gain market share globally rather than try and make money. So China is a different ecosystem. But that the fact that they are making losses tells you that they are actually selling below the cost of production. So there is a natural floor to how much the prices can fall further.
Okay. Ravi, so good doing this today in a nutshell, if you will, because the podcast will be a really long one and will talk in detail about this. But once again, Ravi, thank you for joining in today, and to you and yours, a very happy Dhanteras.
Thank you so much.